Hey folks, welcome back. Mortgage Update. Today is July 21st, 2020. Today is Rate Tuesday. So let me explain to people why I do this. Basically, why I do it is to explain to you I'm not overcharging you. I don't have the highest rates in the business. A lot of times you think, okay, I need a good consultant. What's it going to cost me? You know, you see Charles Schwab and these investment firms, they have discount pricing, but they got great service. That's what I'm trying to offer to you. But here's the dilemma that we're coming into right now. I have a lot of clients, a lot of you, and I'm grateful that apply online. They want the best rate in town, and we get the whole ball rolling. And then we lock in the rate, and then rates trickle down like 0.1, okay? Let me advise you how this works. And I'm not trying to scare you away, but it's like I can't keep going, okay, I'll lock in your rate, but then if rates go up, you want locked, but if rates go down, you want that, and so forth. It's basically like a stock. I'll advise you all the way up to the point where, okay, now what do you think we should do? Once we lock, you're locked. Unfortunately, I can't go back and forth saying, rates went up, so I still want that lower rate. Well, when the rates went down, I want that lower rate. I try my best to give you guys what you're asking for, but once we lock, I mean, you're locked in. I don't want to lose your business over it, but I can't keep every day changing things based on what that market's going to do. My gut feeling is I'll lock you when I think we found that bottom, because my job is that's my job. I'm going to get you the best rate I possibly can. But it's like a stockbroker. They might tell you today, hey, buy that stock. It's a great price. But tomorrow it goes down $1. You can't call that person up and say, I don't want that stock anymore. I want my money back. You just can't do it. So not trying to be negative, but I'm just, work with me here, because a lot of times I had a customer this morning saying, hey, Dan, I got a quote from the current lender we're with. They're offering me a better rate and more money. And I was like, well, how? You're maxed out. You can only go up to 80% of the house's value and pull out cash. And they're like, well, they're giving me 10 grand. I'm like, you can't. There's no program available to do that. Oh, they're also giving me this rate. Well, that rate is based on the house being owner occupied, and it was a rental property. She's like, oh, okay. Well, it was just a flyer that they sent me. Well, that's not an approval. That's not a quote. That's basically a solicitation that you got in the mail, telling you maybe what they maybe are able to do. And then once you get to the fine print, the reason why I'm saying this is, and I don't mean to be rambling, is don't be wowed over the rate, because most of the time my costs are killing everybody. I'm probably at least $1,500 to $2,000 less in fees. I can almost guarantee you there's nobody out there that's going to give you beat the rate and beat my fees. It's almost impossible. So that being said, let's get to it. I'll quit rambling on this side of the thing. So let's get off to where we are in rates. So why people follow me? Well, they follow me because of this number right here. This is the MBS market. This is the investment that controls mortgage rates. And what this is I'll say it again if I say it every day. Green is good. You want to see up, because it's not the rate. It's the price of a bond. So green is good. Up is good. Red is bad. Down, no good. So we like this number when it's green, because it means the price of this bond is going up. The higher the price goes, the lower the yield. It has an inverse relationship. Price goes up, yield comes down. Okay, that's how it works. So we love when this number is going up. And let's get a little trend. What I try to do is watch the trends in the market. And I went over this yesterday, and I do it every day. Look at this trend. We got a nice little trend this week. Okay, that's what's going on. Last week we had a little bit of a hiccup. Okay, there's some lines here that we follow, and I won't go through every one of them, but these are all moving averages. They said over time this is where this price should be on an average. Well, we're way above that. Look at the line we're above. We're way above the averages. Also, these lines right here, here and here. I can't get in there. Here, and down in this level. These are resistance levels. This is a floor, this is a ceiling, and another ceiling. Okay, you'll see in here, look right here, right there, we hit that ceiling and stopped. Right there, we hit the ceiling and stopped. Right there, we hit the ceiling and stopped. So the concern is, we should be probably trading in this range in here, and we're right here. It's a good number we're at right now. The good news is the Fed is coming in and basically stagnating the market. They're buying enough bonds to keep everything stagnant. I went over yesterday to say, look at the stability here. It's pretty stable. You want to see some hiccups in the market? Let's see when the pandemic hit. Bam! This is nuts. Again, down is bad. That means mortgage rates are going up. They spiked, and then they came right back down and hit all-time lows. So that's where we've been teetering off of here. So again, see, we hit that resistance level, hit it. So we keep hitting these resistance levels and coming back down. So that's why I've locked people in this week when we hit these resistance, because you hit it and we come down. We hit it, we come down. We hit it, and we basically stagnated, hit it, stagnated. So I don't know if we're going to exceed this. If we do, it's good for rates. I don't really think we're going to see major changes to the downside. Okay. So for today, though, we had no economic news. Tomorrow's some stuff coming out that I don't think is going to affect anything. And then I post this at the end of each day. So follow this. It's basically a mortgage newsletter. So now, today we're going to go over refinancing. A lot of people are refinancing. Forbearances are hitting record highs, meaning people are looking into forbearance on their mortgages. The thing I can tell you is please don't do it. It's not the best thing since sliced bread that most people are talking about it. And I just got an update on that today. And I'll go in that on the second video today, because I've been breaking up my videos. The first one, I'm going to do rates, the rate update. And then the second video I do for the day is basically going to go over programs, changes in the business, specifics. Like yesterday I did down payment assistance. I do jumbos, all kind of different variations of programs. So we do that, and I also podcast everything. So I went into it, and I went to bankrate.com. And the reason why I'm doing this, I'm doing your work for you. You can scan over the whole country. Will there be one place out there that can beat me? Probably. But is there 1,000 that are worse than me? Absolutely. And this is what I'm proving here. So I went to bankrate.com, plugged this in. Refinance. Our average loan is about 300 to 330. So I put in these numbers. 60174 is the zip code in Illinois. Property value 417. Loan amount 317. Credit score is excellent, 30-year term, and this is a refinance. This is where rates came back at. Okay, right here. So now let's go and compare it to, I'm just going to go to generically Wells Fargo. That's probably the country's biggest lender, and their rate is 3.375. So let's go over here, 3.7, holy moly, 3.4. What are these? Only few matches search with additional products compared. Those aren't the products that fit. So these are the areas where we're looking at right here. Featured lenders. Okay, right there is the rates that they're giving you. Wells Fargo is 3.375. So that's the best one so far in there for a 30-year. So let's go in. We have a loan amount is 317, and we got a value of 417. And this is a refinance. They're not pulling out any cash, and that's what those others said as well. We've got a 740 credit score. Debt ratio is 10, is irrelevant. I'm going to put this one in MM. I'll put this as Illinois. This is my pricing engine. So if you follow me at all, you know that I do this pricing engine. This is exactly live that I'm doing right now, and it is Tuesday at 3:49 Central Time. So let's go down here, and remember, the best rate in town was Wells Fargo at 3.375, and this one at 3.75. Let me look down here. Only a few difference, 3.49, 299 in cost. So 499 seems like it's the best in the business. Wells Fargo is 3.375. Let's see where I am. I'm at 3.125. So let's click this. See where I'm at. So right here, anybody that follows my channel, I'm going to review these numbers with you, and I'll try to blow this up so you can follow. Anything down here negative, this means you're going to get a rebate check back from me to cover any other expenses, such as an appraisal or title. Over here's the rate. So we're going to look at this number and a few numbers here. So for example, in this scenario, I could do 3.125 and give you a $618 credit. Okay? Or you can go to 2.875 and pay a half a point, so $1,700. You can do any combination of this that you want to. But let's go back. The rates here were 3.49, say 3.49 on average, so 3.5. You'd be getting, holy moly, almost $4,000 in credits back from me at that rate. Wells Fargo was 3.375, so at 3.375, you'd be getting $2,771 in credits back from me. So that's where we're at. I'm just going over refinances, and I just picked up between this, there's 13 lenders there, and Wells Fargo, we got me versus 14 other major lenders in the market, and that's where we're at right now. So that's my rate update of the day. So if you want to find out anything more about me or get in touch with me, go to therateupdate.com, or you can reach me at 844-775-LOAN. That's 844-775-5626. And I'd ask you to, if you want to just I'll call you if you fill out this section here, and I'll give you a rate quote, but I will need to talk to you. If you want to apply online, just hit the Apply Now button and fill out as much as you can. And once you do that, within an hour, if it's during office hours, I will be back with you, going over exactly what we can or can't do. And that's the best way to do it. So you can email me if you'd like. My email is pretty simple. It's D for Dan, Frio, F-R-I-O, at preferredrate.com. So, like I always say, please, if I could be of any help, let me know. I'd appreciate if you gave me a thumbs up. Share the video. Let people around you know, family, friends, relatives, coworkers. There's a lot of people out there. I had 2 applications today. Both people were in the 6% range. So please do yourself a service. And if you tried to do it in the past and the costs were too much, let me know, because I even have no cost options for you. The rates are a little bit higher, but it'll cost you not a penny. And we have those going for us. So I'd appreciate if you also leave a comment down below. Let me know if there's any other videos you want me to talk about. And that's it for today. So I will be posting another video, like I said, today, later this afternoon, and we're going to go over what's going on in the forbearance part of the business right now, just giving you guys an update on that to make sure you're not duped into doing a forbearance and maybe jeopardizing your credit scores, or maybe having to come up with 4, 5, 6 payments at one time. So take care. God bless. See you later.